Hi, I'm Anna Cruz with the Home Buyer and Sales Team, Rematch 4000. Curious what the best home loan options are available today? Here with First Choice Financial, we have Christine Chiavaraz here to explain what home loan options will give you the best buying power. Hi Christine, so can you tell us about the best loan options that you have available?
Sure. Some of the programs that we've been working on a lot right now are the first-time homebuyer programs, finding ways that we can help borrowers go from rental into purchasing and giving them that power. We're looking at a lot of loan products where we can supply down payment assistance, their complete down payment, and in some cases, closing cost. We have a wide range of products available for those first-time home buyers. And even with the rising interest rates, we're finding creative ways to get them into a home with little to no money down.
Nice. Can you tell us a little bit more about, the multiple programs that you offer?
Sure. The most popular one that we have is we call it NADA, which means nothing, zero down. And that program allows clients that even have a lower credit score down to a 580. And it gives them the ability to purchase and gives them the complete 3.5% down payment for their purchase. That's a really popular program because you don't have to be a first-time home buyer for that one. So if you have owned a home and sold it, you'll still be able to utilize that program and utilize the down payment assistance program. So that tends to be our most popular one. But the other one that we do have is we work with a lot of professionals in the industries, service industries, teachers, firefighters, police officers, medical field. And that particular program also does not require them to be a first-time home buyer, and also they're able to get a grant up to 2.5% to 3.5%. That one being very popular because it does not have to be repaid. It is a true gift.
Wow, that sounds wonderful. Okay, well, what are the basic requirements to get into one of these programs?
Really, it's get pre-approved. Come in, let's run your credit, let's see where you're at, let's check your income so that we can give a full pre-approval. Pre-approval process is so important. We have to go ahead and we have to look and see where you're going to fall, what your budget is, and where you want to fall for your payment. Those are the most important things so that when a realtor starts working with that borrower and takes them out shopping, they're looking at things that are within their budget. So those are the most important things that we're looking at. Okay. And then of course credit score, again, down to a 580. We can sometimes work below that. And if there's a credit issue, we don't like the word no. So if there's a credit issue, we then sit down to the drawing board and we work together with that borrower to see what things we can fine tune to bring that credit score up as fast as possible to get them into home ownership.
I know you have helped me and Douglas do that, so we appreciate that. Thank you. Let's see, how do you explain to people that it is still important to buy even with rising rates today?
Popular question. So I want to backtrack just a little bit because I've been doing this for 20 plus years. So I've been through the recession, through the fall of this industry. I've seen a lot of different interest rates. My first home that I ever purchased was 14%. Second home I purchased was 7.25%. So when we're talking about rising rates, we are looking at 5s and going into the 6s this year. That is still a very strong interest rate for home ownership. So that's a key that we've been trying to educate our buyers with. But secondly, when you are renting, you are paying somebody else's mortgage. You're building wealth for that owner, and you don't have that control to build wealth for yourselves. And the whole idea of home ownership is so that you are building future wealth, because that home is going to continue to appreciate and it's going to continue to give you that stability for future wealth, allowing you to do things like whether it be take a cash out and buy an investment property down the road, or just make that home a little bit better, or do some upgrades. These are all things that you can do with home ownership. When you're renting, can you do any of that? The answer is no. You need permission even to get a pet. So, so taking control and having home ownership is always going to be your answer, opposed to renting, even in a market with rising interest rates.
Well, thank you.
Mm-hmm.
And can you tell us why it is better to work with a broker versus a banker?
Sure. A lot of people don't know about that one. Actually, Douglas has talked a lot about that too. So we've chatted about that. There are big difference with a banker and a broker. As a banker is going to be adhering to the secondary market, they're adhering to a certain interest rate, but they do not have any control on how they're charging fees to that borrower. So on average, when somebody is a broker and going through a broker, you save an average of $8,000 plus per deal just in fees. A broker does not charge, I call them junk fees. Sometimes that's what I refer to them to. We don't charge an admin fee, a processing fee, an application fee, and in most cases we don't charge an origination unless it's a very specific program. So what that means, first of all, is that we can sit down and we can actually close a deal with zero closing costs from the lender. Now, with rising rates, we sometimes want to buy the rate down. That's something we educate our borrowers. Do you want to work on purchasing the rate down a little bit? That's the only time that would be an out-of-pocket cost for that borrower, if that's what they chose to do. But we educate them, we explain to them why they are doing that. Any credits on the secondary market that are issued for a broker, we issue to the borrower. So that's your biggest advantage of working with a broker versus a banker. A banker with credits, those are the back end. They go towards that bank or financial institution who is closing on that loan. When we see credits on an interest rate on the secondary market, we take those credits and we issue them, and we call them a lender credit to our borrower.
Okay.
Mm-hmm.
I'm going to throw another question out there that I didn't put on my list. But can you tell us about your approval process, your pre-approval process?
Yes, that's something we've worked really hard on. Something we've worked on this past year is what we found. We listen to our realtors. We meet with a lot of realtors, and we listen to them. We ask them, what's the biggest problem with lenders, and what are things that we can work on together? We've listened, and that's what we've worked on. Realtors continuously have told me, we get a pre-approval and it's written on a napkin from a restaurant, and that's as good as it gets. And so this is not okay. And the buying power is very important for our borrowers. So when we put them through that process, when we do an actual pre-approval, we are going to review the credit. We are going to go over the liabilities that the client has. We are going to ask for pay stubs. We are going to ask for bank statements. We are going to ask for W-2s, and we are going to pre-underwrite that file. And we have in-house underwriting, so we have the ability to run that at our office. So when we give a pre-approval, that client's already gone through the underwriting process. So really all we have left to do, find a property, get a contract, and get an appraisal and insurance, and then we go ahead and get it ready for closing. So that's a huge step for a buyer looking in this market, especially being because there's not a lot of inventory, as you guys know. So when they're making an offer, we want to make that offer letter as strong as possible so that when it is presented, they have a very good chance of being accepted.
Terrific.
Uh-huh.
My last question is for those that do not know much about your company, can you tell us more about your history?
Sure. Let's see. I moved out here in 1998. I'm from New England, from the Boston area, and then we lived in New Hampshire. But we came out here in 1998. I started working, I already had financial background, and I started working at the bank for a few years and did mortgages, and decided that I wanted to do things a little bit differently. learned about the wholesale side and the broker side, which is why I started my own company at that time. And I love the world of finance. I love what I do. I think home ownership is just so important to stability in your life and growth. I have 3 sons. They now range from 34 down to 27, and I've encouraged all 3 of them have been homeowners. Some of them are on their 2nd and 3rd homes. They have made money, they have paid off debt, and they've really put themselves in a strong position at a young age. And that's where my heart is to teach young people to do the same thing.
Wow.
Mm-hmm.
Well, that sounds amazing. Christine, thank you for coming in. We really appreciate your time.
Thank you. Thank you so much for having me.
Yeah.
Okay.
Make sure you like and subscribe our YouTube channel so you don't miss out on any important information. Bye.